All right, well, g'day there, everybody. Thanks a lot for joining me on this Tuesday afternoon market recap. As I sit down and speak, there is approximately 20 minutes left in today's proceedings. So if these candlesticks do marginally adjust from what you're looking at the moment on my screen, that is why. Now, in continuation and in progression of the analysis that we've been speaking about over the past number of weeks, today does come as a little bit of a surprise. I'm not looking at today's price action as the beginning of a larger upward move, but more so that of the battleground that we've been talking about over the past number of weeks, whereby we have continued to speak about volatility increasing. All right, we can suggest, or at least today's price action movement is certainly in agreement with volatility rising, even though you could say it is in the opposite direction. Overall, we are still seeing a little bit of bifurcation in the markets, not only domestically speaking in the United States, but also globally for that matter as well. You can see that yesterday, China itself was limit down. I think it closed down 8%. Short selling banned today, or at least yesterday as well. They injected, I believe, almost $500 billion yuan back into the market to keep it afloat. The US markets today obviously like that, and they are now seeing a knee-jerk reaction to the upside. You can see the S&P 500, it's up 53 points today. Okay, the Dow Jones Industrial Average, it's up 450 points. We're back up where we were when we were sort of setting up that little bear flag, even though I didn't want to call it that of a bear flag. But the big market mover today is that of the Nasdaq. And immediately, I hope you can see the difference between the Nasdaq and at least that of the Dow Jones and the S&P 500. What the Nasdaq has been able to achieve at the moment is a closing price above that of the intermediate swing top over here. So although it has been quite negative and even negative through to the close as of last week, you can see the change very quickly between that of Friday's close and what's happened in the first two sessions of this week. Is this a sign of things to come? Personally, I do not think it is whatsoever. I think that tech has largely been the market leaders, not only more recently, but also for a number of years. And really, it's just seeing some of the bigger types of volatility movements in conjunction with some of the earnings reports that are still coming out. So very interesting to point that out. The Nasdaq closing at a fresh new all-time high. However, when you look at the S&P 500, it is still quite a ways away from its high. It's back into this radioactive box that we've been talking about on my screen for a number of weeks. And the Dow Jones Industrial Average, although you cannot see that of a red rectangular box on my screen, you can see that we are still pretty much below where we closed at 2 Fridays ago, which has really led to this volatility whereby we're just bouncing back and forth all over the place. So again, as we draw to the close on Tuesday afternoon, as we move into the final 3 sessions of this week, Wednesday through Friday, I really do want you to sit on your hands at this particular time. The reason for that is because, again, when we go into some of these oscillating indicators, clearly this correction, it hasn't run its course. This is the daily time frame of the S&P 500. It may seem as though the markets are setting up for that continuational rally, or at least it is posting that of a continuational rally on Monday and Tuesday. However, I'm calling that to be a little bit of a false signal. The reason for that, again, is when we zoom on out into the weekly time frame of these oscillating indicators, you can see that it appears we are very close to getting a cross down on the MACD. The RSI is already adjusting and the stochastics has crossed downward as well. The last time we had a cross from this signal, not to suggest that this is going to play out sort of week for week, month for month, was all the way back in the Q4 of 2018. And as such, what we're seeing when we zoom on in back into the daily time frame is that we're getting a little bit of an adjustment around the midpoint. So again, if you wanted to think about the very first concepts that I was drawing to your attention or bringing to your attention when we started to actually give that elevated phase down, we were talking about the slanted neckline, okay, of potentially that of a little double top. Now, we're getting a bit of a mixture on all 3 of these markets at the moment. It does seem to be true, or at least hold true on the S&P 500. You can see that sort of slanted neckline up here. You've got a peak. You've got a secondary lower peak at the moment. But again, we do not have a reversal signal as at the close on Tuesday. But certainly to me, you can see this defined neckline right here. Okay, if this neckline does give out, not saying that it's going to give out on Wednesday, Thursday, or Friday, that's really just going to set, or at least the progression of price action that we've seen over the past number of weeks has set that up to be true if this is to play out. Now, again, if I bring up that of the Bollinger Bands as well, it looks to me also that we could be setting up another perfect double top here. And really, this is pronounced best through that of the Bollinger Bands as well. So as the Bollinger Bands are now starting to move sideways, generally what happens is you get the first neckline. Again, you can see it best through the Bollinger Bands at the moment. And if this move here currently fails, and again, we've been talking about volatility over the past number of weeks and essentially doing nothing. It's really hard, I understand, when you sit back and you watch a day like today's session. But again, the easy thing to do for the majority of people is just to jump in, to look at the price action, to look at the percentage differential and say, everything's okay. This market is still charging to the upside. It paints a different picture when you can start to blend various sort of aspects of technical analysis to the real world scenario that we're operating within. So again, in terms of the Bollinger Band double top, it does fit the same story or the same illustration that I just gave to you with the slanted top, right? But you're going to see price action turn down away from the top band, which is really going to illustrate that of the double top in process and the neckline that I've already brought to your attention. Again, the Dow Jones Industrial Average, the same is true, or below the midpoint of the top and the bottom band, but I think you get the picture where X marks the spot, or where that red radioactive box should be placed on the Dow Jones Industrial Average. Obviously, the outlier at this point is the Nasdaq. It has been the strongest for quite some time, and on this move just here, I'm a little bit dubious about it all. So again, personally, I'm not trading the Qs. I'm not long the Qs. In fact, I'm not long any new positions into 2020. As we sit here, obviously those volatility plays, they've been closed out. However, when it comes to the market indices, not a single trade has been placed on my behalf so far, and I'm very comfortable leaving it that way, even in the face of some short-term pain. Not to say pain, but angst, so to speak, when you're saying to yourself, boy, when you're sort of second guessing, or not so much second guessing yourself, but saying, boy, wouldn't it have been good to actually have been long today? However, when you sit back and you actually analyze and objectively look at the risk that's happening with this market right here without that of a pullback, just to see how overstretched we are and some of these major reversal signals on chart patterns and also candlestick patterns, it's just another sense of, or at least a dose of reality as to why you're exactly not doing what those beginning inclinations sort of eating away at your heart sometimes. So here is the Nasdaq as well. You can see, just to confirm what I spoke about earlier, it has just peaked its head above the swing high going back to mid-January. Again, a little bit of a surprise, but it doesn't really change the analysis whatsoever. We're still looking at potentially that of a double top just here. The neckline is confirmed, much like the S&P and also the Dow Jones Industrial Average. And when you go out and have a look at this, you've still got that top Bollinger Band, which if we do see a turn down off from this, it's really going to illustrate that perfect double top up here. Now, some of the external markets that we've been looking at as well, if I can bring up the right chart, here is the Russell 2000. I think this is the real giveaway as to what's going on in respect to unlocking really the future price action of the Dow, the S&P, and also the Nasdaq. This is really quite perfect. A lot of people, again, continue to sort of reference, you could say, the combination or the continuance of, I guess, diverging data between the small caps and that of the large cap market indices. They're really talking about market breadth, and what they're doing is they're referencing the poor form or the poor nature recently of the Russell 2000. Now, the Russell 2000 has turned down over the past 2 weeks. That's fine. Again, much like the other three closely followed markets, we've seen a little bit of a relief rally here. However, again, we are still a long way below this resistance area, whereby we sort of peaked out at the midpoint of January. So we're getting different blends, we're getting different shades of the same sort of chart pattern at the moment across all four of these market indices. The Nasdaq, of course, being the strongest. The Russell 2000 is probably the weakest. And again, this is buying back into market breadth or a lack thereof. Now, I think this is going to strengthen. However, I do not think it's going to strengthen from this location. We spoke about this over the weekend and even the week before that. But really what we're looking for is the Russell 2000 to break below this structural support over here at 1,600, where a lot of people would become concerned about the Russell 2000. They would start to look at it as a leading indicator in exactly the wrong sort of setting. So we've spoken about our targets on this market. Again, this is a work in progress, but really what you should be focusing on for those of you looking at this public analysis is more so the Russell 2000 coming down to below 1,500, closer to about 1,475 on my chart over here, or 1,471 if you really want to get very molecular about it. If that happens, you're going to hear people talking about, again, the re-establishment of a secondary lower high. You're going to be talking about, or hearing people talk about, the break of this structural support and all sorts of nonsense, which is going to lead into the continuation of this primary bullish macro trend, which has been in effect since 2009 through these varying levels of decelerating fan lines. So again, just to break this down for you, and although you do see these counter trend movements whereby you see the Nasdaq putting in, say, about a 1.6% day, pretty much giving back that same candle that was made on the downside on Friday. You see the Dow Jones Industrial Average up over 1%. You see the S&P 500 up over 1%. You have to take it all in its entirety. You just simply can't look at the individual daily candlestick just here. And again, it's a reminder of volatility again, being sort of elevated at this particular time, understanding that there's a battle, there's a lot of confusion, there's a lot of bifurcation or sort of sentiment in the marketplace at the moment between buyers and sellers. But if you look back historically, and if you wanted to do this through the eyes of the oscillators on a daily time frame and even on a weekly time frame, when you get these really clear signals, and even if you wanted to extend, and these are sell signals, by the way, depending how you register it through the eyes of a trend, but even when you see that also extend to the ADX as well, being up here and turning down on the weekly time frame, again, surprise, surprise, generally bad things happen. And although they're only temporary and we're still looking at a pretty prosperous 2020, really we're still strategically looking to get in at the best price. And the best price for where I believe it to be is going to be below where we were as at the close, only most recently as Friday last week. A little bit of a counter trend move just here, or a counter correctional move, that's fine. I simply wouldn't be buying it. I would just be watching this market and allowing the battle to continue while you sit on the sidelines, and again, be prepared to jump on in at a later date. I know it's hard to do, but you have to believe in the analysis and let it guide you, and just move all of the irrational noise, keep it to the sidelines, and just be prepared to do, right, or to trade your plan, depending on what your plan is, of course. All right, so on that note, everyone, hold tight, stay patient, stay diligent, and I'll be back later in the week when we do see a continuation of market signals. But in the meantime, firmly speaking, the bulls have won today's session as at the close on Tuesday, or moving into the close on Tuesday. It's James signing off on behalf of Pivot Point Trading. Goodbye.